I landed in Berlin about 2 days ago, so I had numerous meetings with investors here, and then also some of the investors who are coming to Berlin Global Dialogue. It's incredible. Everybody was super excited in private about China's move with this stimulus package. And it's very interesting. A lot of people are already placing trades directly or indirectly into this exposure. And for example, the luxury companies in Europe, they have a lot of exposure to China. So I think a lot of investors not only just put money directly with the Chinese equities, but they also putting money into the equities, and they have a strong and correlation with Chinese economy and the consumers and consumption in China.
Patrick, that's a really interesting answer because you've talked about the stock market on the mainland, obviously with Hong Kong as well involved. You've talked about the proxies being the luxury goods companies. One might add the materials companies as well. But you haven't talked about investment necessarily at the grassroots economic level that is actually going to galvanise the consumer as well. So the stock market rallying, the proxies rallying, but what does it mean for the actual companies on the ground in China?
Steve, great question. And first of all, let's just put everything into perspective. You know, this time since COVID, things, I think, recovered slowly. And people are not really traveling to see each other. And so there's a lot of dislocations, misunderstandings of the situation. I'm a global investor, but I live in Shanghai, so I feel, you know, sort of the temperature of the market, but also just put things into perspective. In 2008, I was in the U.S. I was an investor, of course, much younger investor, but I was surrounded myself with some of the best investors in the world, and everybody was super stressed out. And it took some time and for the economy, the market to recover, and certainly the Chinese stimulus package. And back then, and played a big role in bringing the market back. And right now, I think you got to give some time to the market, which has been sort of, in my view, kind of a frozen. And when it talks about China, I think people just needed to be constructive looking at the situation. It's a complex situation. It's much more difficult than before because the size of the economy is much larger. And also the cost of capital is much higher these days. So it's not an easy thing to analyze, but I think it's still analyzable. I think we got to give some time to it. A month from now, looking back, I think we're going to have some really interesting clues.